Hello, I'm Aubrey Ruby, and thank you for joining our event today. I am a senior fellow at the Africa Center at the Atlantic Council, and it's my privilege to be hosting a conversation with some dear friends and colleagues today, looking forward to 2021 and what we can expect in economic and political and health events on the continent. This event is coming as part of our new initiative at the Atlantic Council called the Afro Century Initiative, and it's founded in partnership with the Africa Finance Corporation. And we're really aiming to dig deeper into the investment case for African markets and getting a more realistic and balanced view when it comes to the risks and opportunities in the region. It's my pleasure to be welcome today, or to welcome today, five guests, many of whom I've known for a long time and are dear friends. They are all representing different views from different points where they sit in terms of the investment landscape in African markets. And it's been a very, very challenging year globally, but in many ways, African markets have buoyed optimism in some sense around the health response to COVID in particular. I remember at the beginning of this period, Bill Gates had estimated that 10 million Africans would be dying of COVID. And we're just not seeing that health impact, and we're seeing a greater resilience than we had anticipated. But at the same time, COVID has had a big economic impact in African markets and pushing it into the first recession in 2 decades. Some say, oh, there's over 100 billion in lost output and potentially 40 to 50 million people entering poverty because of the slowdown in growth. So we're going to deep dive into these two kind of impacts of COVID in our conversation today. And I wanted to first turn to Dr. Edem Zazu, who is the founder and executive chairman of Afro Champions Initiative. And Edem, he's a medical doctor. There are many doctors on this panel, but he's a medical doctor, and he was leading so much of the effort around fighting Ebola back in the day. So, Dr. Edem, will you give us a sense of what the health impact of COVID has been in African markets?
Thank you, Aubrey, and it's always a pleasure to be part of an initiative you are driving or a part of. As far as Afro Champions, the organization I represent, we've been lucky to have been involved in the Ebola, as you mentioned, epidemic with a focal uh, direction towards bringing together African private sector to mobilize resources and build capacity for public institutions to fight against Ebola. I think the lessons we learned there helped us a lot for COVID because most of our airports and borders still had public health authorities that were checking temperatures when people come through, as well as also providing some kind of database on where people are coming from, where they're going, and filling these forms to know exactly how declaration forms, among other things. I think what the impact has been is clearly, I mean, it's astronomical in the sense that the continent has, as you know, is fragmented and segmented. There are 55 countries with different public health protocols in terms of what different countries need. So you have a situation where some countries are concerned about Ebola, you have a concern about yellow card or yellow fever. Some countries demand yellow fever, depending on which country you're traveling from. Countries like South Africa to this day require yellow fever certificates from different parts of Africa. And then you've also got a range of zoonotic diseases that we're still plagued with, hepatitis among others. And then now COVID. And we've been struggling to deal with the existing diseases or public health challenges we have, and then now COVID, which for us it's a real crisis. However, we also saw it as the need to transform this crisis into an opportunity to create a new public health order that is going to be so key to helping to harmonize the protocols, the entry and exit requirements, the public health, if you like, information, data that exists across countries to ensure that we have a single public health bubble. And
And
working
that
with
seems
African
to be, that seems that it's very concentrated in Africa CDC, and you're really seeing Africa CDC take a leadership role in that.
Indeed. In fact, I was just about to say that Africa CDC has been at the forefront of providing the leadership because we couldn't have a situation where we could have had a situation where, as you know, all countries locked down. But if one country does very well, say South Africa does very well, and Zimbabwe is not able to deal with the situation, you have a situation where when they open up their borders, the cases run back in. So there was a need to have a supra, if you like, national authority that will be able to sort of absorb the collective strengths of the countries, where we're able to share information across protocols, and then help the countries who need support in terms of logistics, personnel, to also be able to do their testing, data requirement, and all of the things that are necessary to make sure that we have a coordinated, cooperated, and also a collaborative response towards this epidemic.
And it seems that that's happening in parallel to, to the African Continental Free Trade Agreement rolling out, right? It's becoming, the implementation phase is starting in January. So many of these things is happening in concert in hopes that we can get trade and borders open again and movement happening.
Indeed, because, trade movement, you're right that this is one of the biggest phenomena happening or spectacle unfolding before our very eyes is the start of trading, creating the world's largest market in terms of countries involved in this trade pact. But trade is all about movement of goods and people. And if borders are shut, you cannot move goods, you cannot move people. So start of trade is supposed to begin on January 1. And that's why we are proud to have been working with the African CDC and the Africa CFTA Secretariat to get countries to harmonize their entry and exit restrictions, have their test results digitized and verified as you move across countries, and then ensure that between airlines, port authorities, and labs, we are able to ensure that we allow people to move in and out without the transmission of diseases. We think that this is one of the things that Africa is doing that for once, we are setting examples that the rest of the world could also learn from. And we're happy that UNDP has come on board as a partner to showcase some of these experiences to the other parts of the world.
Fantastic. I want to turn to Dr. Rabah Arezki, who is the chief economist at the African Development Bank. Rabah, we've been talking about the African Continental Free Trade Agreement, and there's so much optimism. Obviously, it is one of the positive points of 2021. How are you looking at it, and how do you think it will impact the growth story on the continent in 2021? Rabah, we're not hearing you. Are you on mute? Well, maybe I'll turn, while we're waiting to hear Rabah and get his sound sorted out, maybe I'll turn to Rita Babahuga Nzezi, who's the chief economist of the Africa Finance Corporation. Rita, how are you guys thinking from Africa Finance Corporation's point of view about the Continental Free Trade Agreement and the kind of growth that might come out of it?
Thank you, Aubrey, and thanks for putting this together. It's a pleasure to be here. So we think of AfTA as a huge game changer. And so January the 1st, which is when it comes online with 32 countries that have ratified so far, it's a big day. It's a big date in African history, as we can tell, because for us we can see the shape of future growth and opportunity in sub-Saharan Africa through this Continental Free Trade Agreement. Of course, the agreement is one thing. To implement it and to derive the benefit of it, you need kind of the enabling infrastructure that will connect countries, that will identify the value addition opportunities which are needed to create products that countries can then trade, right? We all know that the impediments to trade now around not just, sort of tariff barriers, but also kind of the physical infrastructure deficit that Africa has had to contend with. And that's where institutions like the AFC come in and the AfDB come in, and other African DFIs that are focused on putting down this infrastructure, the railways, the roads, the air connections that can bring that continental free trade agreement into action.
Yeah, I mean, it's a generational project, and it obviously will require a lot of investment on the infrastructure front, but some of that investment is already being made by AFC and others. But how do you see it immediately impacting growth in any way?
I mean, I think so for us, we're interested in actually trade diversions that have happened on an informal basis. This is something that Afreximbank has also looked into, the extent of informal trade that's already happening across Africa. So I think the immediate impact will be to formalize that trade and bring some of that revenue onto government books. The longer term work in terms of new trade that needs to be created will require obviously the infrastructure going down first, but we firmly believe that there is an initial sort of kind of bounce that will become visible once this informality starts to work its way through formal channels.
Yeah, I think that's a great point of the trade diversion. I got a message, I sent out this invite to a large group of friends and colleagues, and I got a message from someone in Benin who was saying to me that he's seen incredible change. For example, a lot of the guys who were competing against imports are now able to capture their domestic market share. So a lot of these smaller SMEs were growing quite rapidly. They had 200% growth this year because it was really a displacement of the trade that would normally be coming from the outside.
Absolutely.
And so I want to go back to Dr. Rabah, if you can hear us now. We can.
Yes, I do.
Aha, fantastic. Well, we'd love to hear your views of where growth might come in 2021.
No, I very much agree with Rita. Just a word maybe on the regional integration agenda, if I may.
Yes, absolutely.
So I very much see this as a critical juncture for Africa. There is indeed this rising domestic demand, and to harness that domestic demand, it's not just going to be about trade restriction, but it's going to be about competition. It's going to be about regionalizing the competition agenda for the continent and breaking oligarchy, breaking monopolies, and very much build a domestic productive system in order to serve domestic demand. So it's going to be a combination of trade, taxation, and competition to get the domestic productive system to come off the ground and serve that rising consumer demand in the continent.
Yeah, I would hope that the digitization trend that we're seeing across the continent is helping with productivity. If people aren't sitting 3 hours in Lagos traffic or Cairo traffic, then in many ways they can be more productive. But that obviously affects a certain only strata, the elite perhaps of the economy.
I actually think that for agriculture, the advent of the digital platform is going to be a way to defragment or stop the fragmentation of the small production and give a chance for the small producer to coordinate and serve demand. So there are opportunities there. Of course, we want to also be mindful about the rising market power of this platform and try and make that operate for the greater good. But there is opportunities there with digital, including for the porous segment.
Yeah, I'd love to turn to Charlie Robertson now, who's the Global Chief Economist of Renaissance Capital. We often just zoom in on Africa. We live, breathe, sleep it, a lot of us on this call, but you have a pan-EM view. And, are these trends that we're seeing on, trade displacement, a need to stimulate local or regional trade, are these specific to Africa? Are you seeing these same trends in other emerging markets? How have African markets fared relatively?
Where I think Africa's advantage is, as we come into 2021 and beyond, is that it's been the least hurt of any continent by the COVID crisis. And I think I may have been the first to point out that was likely at the beginning of March, when I said it's such a young continent and we could see the age, how people are getting hit by age in Korea and Italy and so on. But what I think is more important probably for the next 10 years is that we're going to see the lowest borrowing costs I think we've ever seen for Africa. The incredible heightening of debt levels in the West means I don't think we'll ever see high interest rates again in America or in Europe. And that's going to leave a whole load of Europeans and Americans saying, where on earth can I get a yield from to retire on? How can I retire on 1% US 10-year treasuries? $1 million fund gives me $10,000 of income. That's nothing. Where am I going to get the yield from? And they're going to throw money at places like Ghana, I think, where the yield's 8% in dollars now, today.
Yeah, that search for yield has been a conversation point for ages, and yet I don't see institutional investors in the US moving quickly into African exposure. In fact, I think it's been an uphill climb to see those institutional investors go. But I do understand on the bond market, you just see Cote d'Ivoire issue during this time, even despite Zambia's default. So maybe that's more what you're imagining on the Eurobond side of things versus, you know, a stampede of institutional investors looking for Africa exposure.
Well, I think people were waiting for the Trump election defeat. If he had won, there would have been a whole shift back to intensification of the protectionism and the opposite of what we're seeing with the African free trade area. But since he's gone, we've seen Peru, which has been hardest hit of anyone from COVID, massive 30% fall in GDP, worst deaths of any country on the planet. And in terms of percentage of normal deaths, it's over 20% of a normal year's deaths in Peru. And they issued 100 years worth of debt at 3% in dollars. China borrowed negative yields in euros. So this has happened since Trump's election defeat. And I think what we're going to see then is people saying, where on earth can I get that yield from? And it's essential because the African free trade area isn't going to make any difference unless Africa industrializes. It's only when you have an industrialized economy trading industrial goods across borders that you start to see value go up. This is why the intra-regional trade is so small in Africa, because Ghana isn't going to sell cocoa to Ivory Coast, and Ethiopia is not going to sell tea to Kenya. But when you start to specialize in industrial goods, which requires investment in electricity, and that requires low interest rates, because interest rates are still way too high to fund that electricity rollout in the main. You need companies like AFC, Rita's company, doing exactly what it does best.
Yeah.
Pulling out that energy infrastructure to help the countries industrialize.
Yeah, and I hope we get to that takeoff point. I mean, we know that African markets are less industrial today than they were in 1980. And perhaps the, you know, rejiggering of global supply chains can spur some of this, and the need to diversify away from the factory of the world, which has been China for the last 20 years, into other markets will encourage that kind of industrial growth. Also larger markets that are going to result from the African Continental Free Trade Agreement, so that companies see themselves investing in a larger region than just a small country.
If I can add one tiny point, you've got Egypt's minimum wage is about $120 a month. And China's now expensive. The richest province in China, it's over $300 a month. I think that shift of factories, it's already happening to places like Vietnam and Pakistan, Bangladesh. But I think if the electricity and the adult literacy is there in Sub-Sahara, the investment will come.
Great. I would like to turn to Dr. Razia Khan. Razia, you're coming from this from a also kind of a macro level perspective. What are you seeing the major economic trends for 2021 for African markets?
So there's been a lot of discussion on the Africa Continental Free Trade Agreement, and I think we probably need a bit of caution in terms of what difference this will make to growth immediately. We know that under the Africa Continental Free Trade Agreement, essentially effective January the 1st, 2021, but signatories to the agreement are given a whole 5 years to dismantle 90% of the internal trade barriers. Now, a point that's already been made by the other speakers is, of course, there are a lot of intra-regional barriers to trade, the lack of the infrastructure. And I take Charlie's point about how we're in a different financing environment, potentially low interest rates, but there's still a big question mark around how easy it's going to be for different sub-Saharan African sovereigns to be able to attract the financing that's needed. I think if we were looking at the growth picture in 2021, and a good way of characterizing it would be a technical recovery, you're absolutely right in that sub-Saharan African countries have seen perhaps a milder COVID impact. The health impact of the pandemic was not as bad as initially feared. And that is the good news, notwithstanding the fact that we are now seeing second waves in a number of different countries. So South Africa gets a lot of the attention just because of the testing and the measurement. And it's certainly been the epicenter of a lot of the region's known COVID cases. But other places are seeing a second wave. The expectation is that we're not going to see the same COVID containment measures. So the hard lockdowns, the curfews even, that was so disruptive to economic growth, the likelihood is we will not see governments resorting to that necessarily. That's the good news. And just on a weaker base, the expectation would be that we see faster growth. But let's not forget the very real economic impact that the COVID crisis has had on sub-Saharan Africa. And the key one is that many African countries, including the largest economies, were struggling to revive growth ahead of the COVID crisis. For oil-producing countries, oil was something of a magnet for the negativity of sentiment around COVID, given that people stopped traveling, the airline sector was particularly hard hit. And the good news might be some stabilization in prices, but almost every country or every sub-region is left with a higher debt ratio. There is no getting away from this. And we need to think long and hard about what does this higher public debt ratio amidst a likely weaker medium-term growth environment mean for the region's ability to reignite growth in a meaningful way.
Yeah, I think there's a broader question there I'd like to bring in kind of the whole panel to, and I want to invite our audience to ask questions. We are going to actively weave them in. So please type into the Q&A and we'll see them and address the different speakers as we go. But I do want to bring up this debt trap, debt discussion to the whole panel because Charlie sees a lot of countries looking to borrow more, and Razia, you've mentioned that you have debt concerns. So how are these two things going to coexist?
I would say first up that I don't disagree with Charlie. We can't ignore the fact that while the vaccine and the logistics around it and the funding issues means it will be a while before this meaningfully changes the situation on the ground in many different African countries, nonetheless, that has created a great boost to investor sentiment. So the combination of the US election result, expectations of a more multilateralist approach from the US, the news of the vaccine, good for risk appetite, lots of flows, a lot more into emerging markets, more potentially into frontier markets, but for now on a pretty selective basis. We think that in terms of local currency debt markets, there has been a fair amount of damage done to prospects in countries where new restrictions were put in place, where foreign exchange markets are not necessarily functioning as smoothly as they once were. And it may be a while before we see more substantive flows into all of the local currency debt markets. Eurobonds have now been tested. We've seen the first post-COVID sub-Saharan African issuance, but that was for one of the countries regarded as a better credit, a more favorable credit in the region. So it's going to be selective, essentially.
Yeah, so I would like to invite anyone else to speak to this issue. I mean, there's been so much concern in Washington around debt levels. And in my view, you're going to see some divergence, right? Some countries are able to carry the debt and have a broader, more diversified GDP and economy. So, and they have a broader tax base, whereas other countries are more resource dependent, et cetera. So you may see greater divergence in that. But Rita, did you want to comment?
Yeah, I wanted to comment on this because I think that, we're just going to need more growth to support the levels of debt that countries have run up in recent years and are doing so as a result of this crisis. So the fact of the matter is that there are very few sovereigns, I think, that have the fiscal space to support a very strong recovery the way we're seeing in other regions. We haven't seen as much fiscal stimulus for that reason. The financing is a challenge, and the headroom is just not there. And I think this then raises the question of which entities will bring about the recovery. And here I think it's important. So from our perspective, we're private sector, we're private infrastructure financiers, but then we're also a DFI, and there are other DFIs on the continent. And we have been working individually and together to try and fill some of this financing gap. It's not enough. What these few 4 or 5 or 6 DFIs can bring to the table, but it is something. And I'll just tell you why. I think the impact that comes from DFIs and operating in very specific sectors, such as ourselves in infrastructure, can be extremely important in the current context. So what are developed countries doing in their stimulus packages? For the most part, they're focused on infrastructure as a way out of growth, green infrastructure. And this is something that Africa has a deficit around, and Africa needs. And so from our perspective, I don't know if I'm still on.
You are. So, I guess, Rita, one of the things that I would like to jump in there, though, is if infrastructure investment is needed, I'm seeing big predictions of Chinese financing, the Belt and Road Initiative, dramatically decreasing, right? As the Chinese also see growth restricted as a result of COVID. So, if we don't have the Chinese financing of infrastructure at the same levels in African markets, and we know they were the #1 financier of infrastructure externally, then how do we fill that gap? And that's an open question to the panel as a whole.
Right. So our view on that, and our definition of infrastructure investment is quite broad. It's not just roads and bridges and power and energy. It's also investing in value addition, in beneficiation, because we think that the way Africa has traded for many, many years is just completely counterproductive. Okay. This model of exporting primary commodities many thousands of miles away to be processed in factories, coal-fired factories in Asia and elsewhere, only to re-import the same products.
That's Charlie's point about industrialization. Industrialization hasn't happened. That's why the benefits.
Yes, exactly. And so our approach, and this is borne out, and there are trends on the ground through our individual, products and investments in individual countries that we've been involved with. Our approach is to build manufacturing production on the ground, and do beneficiation to the extent possible on the ground in Africa, which will create jobs, which will create the manufactured products for trade, either for trade externally, and if the market isn't there, for trade domestically, intra-Africa, amongst other African countries. And I just wanted to pick up very quickly before I give up the mic, a point that Charlie made earlier on about the lack of industrialization on the continent, just to point out that there are some developments on the ground. And in terms of our own investments in infrastructure, industrialization platforms, we have had a lot of success in Gabon, for instance, where during the period of the COVID crisis, we have a special economic zone there, which is an integrated sort of infrastructure product that has airports and mineral ports, but is focused on value addition in the timber sector, and also value addition to the mineral resource of Gabon, and there we've seen huge, unprecedented performance in terms of production and in terms of exports during the course of the pandemic. which is sort of related to some of the stimulus measures that have been put in place by developed markets. But we've seen huge demand for timber products, and also, obviously because of what's happening in China with the early recovery. Huge demand for industrial metals. Yes. So all of that to say that this is a platform that we're in the process of expanding beyond Gabon to a number of other West African countries, Cote d'Ivoire, Benin, Togo, Mauritania, building around the specific natural resources in those individual countries. And it's a platform that we think of as having the potential to create industrialization in individual countries. It's tried, it's tested, and it's shown results in Gabon. But these are trends that you're not going to see in the macro numbers for Gabon from sort of an FI perspective. Gabon, has a terrible credit rating at the moment, and its bonds are trading in terrible space. So I think there's also sort of it's important to, from our perspective, to understand some of these trends, which from a macro perspective, investors are never ever going to see, and maybe this sort of feeds into the risk premium and the perception of risk in individual countries that they have.
Farley, I know you wanted to come in, and then Rabah as well.
Well, that was really interesting. I don't pay enough attention to Gabon because I just see it as an oil exporter. And I never assume that a country that exports that much oil per capita will really industrialize. But that's my miss for not paying attention. What I was thinking about was we are seeing a second industrialization wave in places like Morocco, which is now an industrial power, basically, and selling its Renaults and Peugeots and everything else all over the place. But they've done that on the back of this very low borrowing costs. And I think what Aubrey was getting at there with China pulling away from that cheaper financing and the local savings in many countries not high enough, where's the money going to come from? And I think one of the questions I wanted to come back to you, Rita, because you've got background at the IMF, but also Rabah, because he's at the World Bank, is Gordon Brown this morning or last night in the Financial Times is saying we should do the special drawing rights expansion again, that the Trump administration blocked the last year, 2020, but which Obama administration did successfully in 2009. And I'm just wondering how you feel that's gonna help turn the situation around.
Yeah, Robert, maybe you can come in on this.
Thank you very much. This brings me to the point I wanted to raise about the nexus between governance and growth. So definitively, Africa needs a bridge to the post-COVID era, and the special drawing right could be providing that very much needed bridge. And to go back to this governance issue, I think there is a sense that if Africa comes together very strongly and sends a very strong signal that there are important governance system shifts that would reassure investors and perhaps turn, instead of relying more on debt, being more on the type of equity type of arrangement. This would align the creditor and debtor, interest in ways that we don't see with the traditional debt instrument. So there is an opportunity for Africa to indeed benefit from the international community debt relief and other support, but while benefiting from that international body needs to signal very strong commitment to this governance shift. And that's very important in the short run because it's going to release some fiscal space, but it's going to be a very strong element, foundational element for growth recovery. As you know, many countries are dependent on imports, and these importers are lobbies, are monopolies, and they are also one of the big roadblocks against industrialization and having that domestic productive system emerge. So governance for growth, I think, as the key pillar for the recovery.
Yeah, I want to come back to this trade dispersion and the opportunity for Pan-African companies with Edem in a moment. Razia, I know you wanted to comment on the Belt and Road kind of retrenchment and what that might mean for capital flows into African markets.
Sure, there's been a lot of focus, perhaps understandably in the recent past on supposedly, what we see as a falling back of Belt and Road related flows. But the real question, given that 2020 was very substantially impacted by the COVID crisis, this would have impacted activity. This was not a normal year for lending. The real question is, what is the bigger medium to long-term picture in terms of the availability of financing from different sources for African countries? When it comes to the Belt and Road Initiative, if we look at China's own priorities, the growth targets that it has set itself, the need for rebalancing, Belt and Road has always been a key part of that. And it's very difficult to see that going away entirely, even if there has been softness in the numbers recently, as there has been across a wide variety of different metrics. More importantly, looking to the post-COVID reset and the need to secure longer-term alliances, we think that China will remain a very important source of financing for African countries. On the point that had been raised by Rita and Charlie and others on the SDRs, I think at this point, given that the G20 has endorsed the debt service suspension initiative for African countries and poorer countries more generally, there's a lot of thinking about how much is this really going to change on the ground. We know that for now, the debt service suspension lasts until the end of June 2021. There's still a big question mark around private sector participation. Perhaps that isn't a long enough timetable, given the kind of organization that would be required for any sharing of that debt service suspension by private creditors not to be construed as a default. Perhaps we should have been looking for first best solutions all along. And the idea of an SDR allocation that would raise foreign exchange reserves of all the beneficiaries potentially, as we saw in 2009, may have been the better way of approaching this crisis all along.
Sure. So I do want to see on this opportunity for African companies to displace some of the trade that's happened. Adam, you guys at Afro Champions have been creating an Afro Champion Index, and for a long, long time, there weren't many companies African companies operating cross-border in African markets, especially outside of South African companies. You had Dangote and a few others, but many companies in African markets are just national champions. So do you think that this is an opportunity, this kind of COVID period is an opportunity for African companies to grow cross-border?
It's a massive opportunity, Aubrey, and I want to also touch on something Razia and others said. And it's something that always strikes me where I normally ask myself that, let's just assume that Africa, 20, 30 years from now, just caught up with Europe and America. What does that really mean? Does that mean there's no unemployment? Does that mean that we've solved all our problems? Does that mean that we are no longer in debt? I think just a classical look at where the global state of affairs is economically shows you that even the world is in trouble. So, I mean, trying to get Africa to catch up may not necessarily be where to go. Afro Champions' attitude is, rather than trying to catch up, can you turn in a completely different direction and perfect another model that possibly others could also learn from you. 25 years ago, we hardly had any African multinational was integrating the continent through its cross-border investments. We see a lot of them now. We didn't even have an African Finance Corporation then. So there's a possibility to do a lot on the continent. We look at the illicit flows. What do all the countries have in common? Trade deficits. We import more than we export. Yeah. And puts a lot of inflationary pressures on our currencies. And I see the continental free trade area again, just as COVID did, presents a massive opportunity for the continent and its companies to just start thinking different about how we want to approach things from an economic standpoint. Value addition, being able to look at the things that we can add value to, that would just change our economy and growth, almost exponentially, just by adding value. And if we can begin to bring together the same harmonization again, bring the economic operators, the policymakers, and the brilliant academics and scientists, because you can't talk about industrialization without STEM. A lot of the research that gathers does in universities, there are things we're looking for in one country, the research has been done in another country, but we're just looking for it to be handed over to us from somewhere else. So this is where I think we need to put some focus on things that we need and make the CFTA become an investment opportunity as opposed to just a trade treaty. And as long as private sector sees this as an investment opportunity, they're going to invest in it. And with the right investment protocols, others from elsewhere internationally will also invest in Africa and create that growth. For a continent that has the youngest population, this should be the center of the world. I mean, this should be the center of the freshest ideas for innovation and everything. And the hub, the center for which people could come and bring their ideas to create growth that will benefit the entire world as well. Thank you.
Yeah, so I'm going to go through some rapid fire questions so that we've got some questions from the audience, and I'm going to put them to different people so we can cover as many as possible. There's a desire to talk about some specific countries. We know that we're talking about Africa as a region. So, you know, Razia, Charlie, are there specific countries that you're optimistic about and you think will perform better in 2021 and beyond? Razia, I'll start with you.
If we go back to the topic of local currency debt markets, Ghana has just had elections. Again, a very smooth transition, perhaps with a tighter parliamentary election result than had been expected. Investors' key concern tends to be around the fiscal, and we do expect that there will be an early attempt to address this, to provide reassurance early on. Ghana is also one of the few countries that hasn't seen the functioning of its foreign exchange market significantly disrupted. So purely from a portfolio flow aspect, we think that Ghana, of the frontier economies, is likely to see a lot of interest. More established emerging markets will probably be the beneficiaries of the larger flows that we expect given risk-seeking appetite. South Africa looks interesting to the extent that reforms are being adopted, and we've seen a range of different positive signals in the last week alone. Perhaps that is another market that's likely to see significant inflows. Nigeria is the interesting question where there's always a lot of expectation around Africa's largest economy, and to the extent that Nigeria can really build on these tentative signs of reform aimed at reducing that oil dependency. We've seen the lifting of fuel subsidies. We're starting to see things moving in a more positive direction with power sector reforms, but there's a lot more to do. If Nigeria can build on that, then it may well be of greater interest to investors over time.
Sure. And Charlie mentioned Morocco. Charlie, the other countries you want to kind of point out? Obviously, Adam's sitting in Ghana and as proudly Ghanaian in terms of Ghana's opportunities. So glad to hear that. But Charlie, are there other questions?
Well, I was just going to say, I think Ghana's should be one of the biggest success stories in Africa in the next 10 years. It's got the electricity, it's got the education, and now you've got a government re-elected that can push the right agenda for the next few years. The immediate bounce back is going to benefit all the tourism countries. So that will be a bit of Kenya, Mauritius, Morocco, Egypt. You're going to get tourism back in the second half of 21. It's going to help them all. But I think the bigger driver in 21 and 22 is going to be Chinese growth, not Chinese lending, but Chinese growth. China's GDP is likely, we think, to grow about $2.3 trillion next year and another $2.3 trillion the year after. That is Africa. So the additional GDP growth in China is the size of the African economy. And that, I think, is why we're seeing copper prices at 7-year highs, iron ore prices shooting up. I think that Chinese story is really going to lift the whole continent. So everyone's going to look quite good for a year or two. But what countries have got to do is invest in the right infrastructure. And building a road from, I don't know, northern Nigeria to Niger won't be a useful spending of money. What governments have to do is focus on getting the infrastructure built that helps them sell to rich people.
Yeah, I'm glad you
brought up
the infrastructure piece again, because one of our questions is around industrial parks, right? And it's something that I've looked at deeply because Nigeria alone has 35 industrial parks existing. None of them have performed in terms, maybe one or two, but none of them have had the same results as some of the Asian ones. Africa as a whole has somewhere around 600 industrial parks, and you don't have the same impact that they've had in Asian markets. And we know that there's some progress coming, and Rita mentioned the one in Gabon, which is an industrial park. So I put the whole question to Raba and to Rita on industrial park. I'd like to turn to Raba and Rita on industrial park model for economic growth.
I'm of the age to think the Asian model works really well, and what they're trying to do in Ethiopia is capture that Asian model. The difficulty Ethiopia's got, it hasn't got the electricity or the adult literacy to be a serious industrial power for at least another decade. So it's only limited, but I still think it's a good thing to be doing, and it will pan out, should pan out well in the long run, providing they can keep their debt under control.
Robert, you want to comment on industrial park and those?
Yeah, I actually would disagree with my colleague here about the Asian model. So I do think that the Asian model has been heavily reliant on very capable, very strong state capability. And I do think that the African model is going to be more of private sector led entirely, and with the right light touch regulation, but without having a heavy hand of government trying to lead the way.
Rita, would you like to say something on the industrial parks?
Yeah, so we think of economic zones as powerful industrialization vehicles, but our approach to them is slightly different. It's very different from the Ethiopia approach. So for us, the industrial park is an integrated set of infrastructure assets that feed off of each other, and create this sort of, maybe just let me give you an example just to make it clear. So usually they're built around a product, a natural product, a resource, timber in the case of Gabon, and you know, you have to provide the transport, right, to the port and back. You have to provide the transport from the plantation to the industrial park. You have to provide end-to-end logistics within the industrial park to attract the investors that are going to come and set up shop. And you have a cohesive set of assets in the end. So in Gabon, it's ports, it's airports, it's logistics, and it's an industrial platform around manganese and timber. So that's a whole. It's a completely different story than opening a park where you invite investors to set up their own individual, sometimes varied businesses.
Yeah, so another whole set of questions we're getting is around the African Continental Free Trade Agreement. And one kind of concerns how foreign partners, the United States being one of them, are going to kind of negotiate with them. Think about the UK as well, in a post Brexit world. The trade agreements, are we going to see a free trade agreement between the US and the whole African Continental Free Trade Agreement, or free trade area, or the UK? So, any comments on how countries are thinking about it? I can say from the US perspective, that's one of the things we're looking to see above this new Biden administration is more engagement with the African Continental Free Trade Area and the structures that are being created around it, not just the bilateral approach that defined the Trump administration. But I don't know how the UK is thinking about it. Charlie, any comments there?
No. The UK just depresses me on this issue, please. I have to pass that on to somebody else.
So, and Razia, any comments on how international parties are negotiating with the Continental Free Trade Area?
So in terms of the UK's relationship and focus on Africa, what we've seen very clearly is because of the new uncertainty created by Brexit, there has been an attempt to try to create certainty with some form of trade agreement that would have replicated what many of these countries had with the EU previously. But I think the more interesting question, and where the questions seem to be going, is if there's an Africa Continental Free Trade Agreement, are we going to see a resetting of some of those bilateral trade relationships in any meaningful way? And to echo what you had already said, Aubrey, I don't think this is going to be a big feature necessarily, that African countries deciding that they need to trade a lot more with themselves. It is a long-term process. The enabling infrastructure isn't necessarily in place everywhere. The fact that there are very few trade complementarities, to go to Charlie's point about trade more with wealthier countries, because that may be where the big opportunities lie. This is a longer term process, and the fact that African countries are moving towards closer trade integration finally is a good thing, but it doesn't in any way take away from the trade that needs to happen with the rest of the world at the same time.
Yeah, so we're nearing the end of our hour together, and I wanted to spend the last 10 minutes chatting about overall trends that you think the markets are missing. What are other observers missing when they look to African markets? Many people are saying, okay, we're going to see East Africa recover fairly robustly, fairly quickly. You'll see Nigeria continue to kind of limp along. South Africa, kind of slow growth. They're going to be hit more. This is kind of the normal conversation around African markets. But I guess I want to ask each of you, what are observers missing? Adam, I'll start with you. What do you think outside investors are missing when they think about Africa these days?
Well, I think the issue still remains that huge SME informal sector that is so disaggregated, but yet so disconnected from the indices that we use to create a lot of the reports that we normally generate. That's a whole economy on their own that have been sustaining themselves. And all they need now is being able to become visible, to banks so they can have access, and also using more unconventional ways, because trying to get every SME to own a business, pay tax, do whatever, etc., just won't happen. And what we are trying to do now, again, is to bring them into clusters, whereby they are able to now co-share meter brands, for the products. So if you take a number of products, for example, a lot of them are raw materials that are leaving, whether it's shea butter, whether it's cocoa, whatever. Bringing all these young people who are coming out of college, and instead of expecting them to just go get jobs, work with clusters where they're providing services to them, either for auditing, accounting, etc., etc. So a lot of that has begun. And we've seen the app that we just deployed now called the AfCFTA app, where we're encouraging every SME to have a CFTA number. So with that profile and with that number, because we keep talking about the hard, we're good to talk about the infrastructure and all of that, but it's also the creative energy that exists. It's also the ingenuity that exists in a lot of the cultural diversity that exists of people. A lot of the contribution that Africa gives to the rest of the world is not just raw materials. It's also knowledge, it's also intellect, it's also music, it's also art, it's also sports. All of these things now need to be valued, need to be put on. And things like intellectual property and others being negotiated into the free trade agreement will increase growth in that respect that we are missing.
Adam, you're so of my heart. I've spent a lot of time writing about the creative industries and the market that people are missing around the investment opportunity in creative industries. I recently wrote about sports, and we're going to launch a sports initiative at the Atlantic House and looking at the opportunities. And I think bringing up the informal sector is so important, because for the last, 30 years, we've been talking about formalization of the informal sector, but in most countries, it's getting more informal. If you look at the US, Europe, the developed markets. And so, can technology companies and these VC firms bridge the formal and informal? And you're seeing a lot of that, whether it be Twiga, Kobo 360, Lori, Cars 45, all these big players that are raising $20-30 million in their growth story are bridging the formal and the informal. So I'm glad you brought that up. Let me go to Rava. What do you think observers are missing when they look at African markets?
Yeah, no, I actually agree with what you just said. So I think there is a willingness to continue with the top-down approach, but there's really a bottom-up, a wave of transformation in fintech that's also transforming the continent. And I do agree that this is true, that wave of transformation that Africa would really industrialize and also create the kind of decent job that we all aspire to see created. So that's I think what investors are missing. That's not yet fully investable through stock market, but if we get stock markets to unify and to take a look at certain exits in the continent, that would really, I think, change the landscape and allow us to rely more on that bottom-up wave of change.
Well, the venture capital space and the fintech in particular has been an incredible bright spot. More money has been raised in African venture this year than last year. And you see continued growth, and that's reducing the cost of moving money across borders. So the friction of cross-border payments is being reduced, which adds productivity. Rita, I'll turn to you.
Thanks, Aubrey. So at the risk of sounding like a broken record, I'm going to go back to the theme that I have been banging on about all hour long, and this is to do with trends on the ground around value addition and industrialization. I think the COVID crisis has presented an opportunity for a massive reset. And what, so this is work that has been ongoing. I mean, institutions like ours have been doing it, but what we see that's different in this environment is sort of a real recognition by huge commodity exporters, the oil exporters. For them, I think this shock is different. There've been many crude oil shocks in the past, and prices rebound, but the discussions that are happening right now globally around the future of oil and fossil fuels and the transition to renewable energy is really concentrating minds, I think, around the need to find alternatives. And the immediate alternatives are really around building local industry. In countries that have mining sectors, it's don't just extract and export. And to comment, I think Razia and Charlie talked about maybe it's better you trade with larger economies. No, that's not our view, because the current trading arrangements in which you extract and export make you a price taker and increase your vulnerability, as has been demonstrated time and time again. So I think there's a real effort, and it's coming now from policymakers, the private sector, institutions such as ourselves, to drive this idea of value addition and beneficiation as a model for Africa's industrialization in the future. So I'm going to point to a number of countries to keep an eye on, because here is where these trends are happening on the ground and are probably not visible in the macro numbers yet, but they will be with time. So Gabon's one of them, Togo, Benin, Cote d'Ivoire, Senegal, Chad, and Egypt. So for me, and that's sort of opposed to the other sort of East African sort of more consumption-based growth model, which I think also has its limitations.
Thank you, Rita, and I'm glad you brought up the resilience. I mean, we've seen increased resilience of African countries. If you looked back to the commodity price collapse in 2014, 15, 16, you saw a faster return to growth than many had expected. So there has been greater resilience in the economic structures than often appreciated. Razia, I'll turn to you. What do you think the
Sure. I guess in the interest of time, I would say what all speakers have reflected on is never go with the received wisdom, take a look at what is actually happening on the ground. But to the point about trade, I don't think it's a question of either or. We know that there are a lot of issues that do impede the intra-regional trade. We know that has to change, and we expect that with the Africa Continental Free Trade Agreement, this will evolve over time. But it in no way takes away from the need to continue trading and seeking out opportunities wherever they are. So domestically, intra-regionally, within the region itself, and externally. Hopefully 2021 will be a year of progress on all fronts.
Including productivity and industrialization, those structural things that will undergird long-term sustainable growth. Charlie, you get the last word. Charlie's one of my favorite contrarians on some things. So what do you think investors and markets are missing as they look to 2021?
Just changing the background, because we're going into winter time now here in the UK. So there's two things. First, in 08-09, Africa got away the lightest from the global financial crisis. 2020, I think, again, it's the continent which will get away the lightest from this crisis. And I think that's what investors missed, is that for all this talk of diversified assets and so on, actually the continent does succeed in doing that. Hopefully they're not missing much else, because people on this panel are doing such a good job trying to inform. But what could I be missing? Most obviously is the services tech aspect of the story. That for all my focus on textiles and industrialization, I'm just a bit too 19th, 20th century. And you will be able to use tech to create jobs, offshoring and all of that, which is being talked about, but on much less electricity requirement than you'd need for industrialization. And maybe that can happen. And I think there's going to be countries like maybe Rwanda, which could show us how that could work. And their investment, they borrowed 5% of GDP 7 or 8 years ago. By the time they pay that money back, it'll be 3% of GDP. They'll have got a lot richer. They'll have a much bigger health budget as a result of their bigger economy. It's been working, so they've invested it well. And if you can do that, then we can have some great successes.
Yeah, thank you for the tech trends are those that are really unbelievable, and they follow different laws of nature, if you will. And you think of the rapid price decrease. I'm looking at companies, the U.S. companies from SpaceX to Google to Facebook, and what they're investing in terms of digital infrastructure. And then how Africa 50 and other entities are investing in digital infrastructure. Digitization is the most amazing thing coming out of 2020. It was already there, but it's, COVID has poured jet fuel on the issue. And digitization, what that means for African content producers, what it means for so many more exports that are rich in African culture, and allows African talent to be more engaged in global markets. I mean, I think it's impossible to predict where that ends up, but it's definitely a bright spot. So with that, we end on a positive note. I really want to thank this esteemed panel for joining. Some of you are already on vacation, but a happy holidays to everyone. And hopefully you have a restful, healthy, and peaceful season. Thanks everyone for joining, who were watching on YouTube and have joined directly to Zoom. We look forward to having events like this again as part of our Afro-Century initiative starting in January. Thanks, everyone.
Thank you.